Hey, listeners. We just recorded a stacked panel episode with Max Resnick from Onza, Austin Federa from DoubleZero, and Lucas Bruder from Jito. Each of these guys are working on core pieces of Solana's grand plan, which is to build out what Solana has taken to calling internet capital markets. Basically, the vision that anyone with an internet connection will be able to access the world's financial markets. A blog post from Onza, which is Solana's developer shop, said market microstructure, things like how liquid tokens are and how tight spreads between buyers and sellers can get, will be a key piece of accomplishing internet capital markets. We get into some of the intricacies there, as well as the big picture vision for how Solana and its ecosystem are planning to actually make this thing happen. Let's get into it. This episode is brought to you by Katana, a DeFi-first chain built for deep liquidity and high yield. You'll be hearing more from them later in the show. Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. Hello and welcome back to another episode of Lightspeed. We have an absolutely stacked cast here today to talk about the Solana Internet Capital Markets Roadmap. Very excited to do this episode. I'm joined by Max from Onza, Lucas from Jito Labs, and Austin from DoubleZero. Guys, thanks for joining me.
Thanks for having us.
Yeah, thanks for having us.
So there's a lot to get into here with this new piece that Onza put out, the roadmap. But before we get too deep into things, I don't want to assume that people have read the piece. It's not an assumption you can make in the crypto world. So I'm just going to start out and throw it to you, Max. Give us a high level overview. What is the Solana Internet Capital Markets roadmap as you laid it out?
Yeah, so let me say a little bit, like, we've kind of departed a little bit from the standard Solana approach, which is to just ship things as they're ready, and kind of laid out a longer term view of what the changes are going to be that we're pushing for in the next, say, 2 or so years. And the reason we're doing that change in terms of like providing forward guidance is because this affects apps in particular. And so apps are going to be making all these decisions about how to resource and what their strategies are on this timescale. And so we're providing, in some sense, like, how is the current thinking looking for the next 2 years so that nobody gets caught by surprise by features that do land and everybody can plan. And the basic idea of what we're talking about in this post is how can we give more tools for apps? So I think of Solana as a platform, and apps are what are built on that platform. But if you think of something like an iPhone app, it can use all of the tools within the iPhone. So it can use the gyroscope, it can use the camera, it can use the microphone, it can show you something on the screen. And in Solana, we let the apps control state with their transactions, but we don't let them control other things like ordering of execution, the scheduler, all of these kinds of things. And so it does have an impact in that it limits which kinds of apps you're allowed to build and which kinds of apps are feasible. And so what the Internet Capital Markets Roadmap is about is, for financial applications in particular, give them all the tools they need to build successful applications on Solana by opening up an interface into the scheduler itself and giving apps kind of fine-grained, millisecond level control over how orders are sequenced.
And maybe a follow-up to that, Max. I think there's been an interesting trend in 2025 where Solana, the kind of Solana meme for a while was IBRL, increased bandwidth, reduced latency. But now in 2025, especially this summer, it seems like there's a lot more focus on market microstructure. How are transactions sequenced? How do things work at a very granular level? So what precipitated that new focus, if it is a new focus? And yeah, why does Solana care so much about microstructure right now?
Yeah, so the reason is because from the very beginning, so it's not a new change in direction, it's just did the tools that we were trying to use to solve the problem work? So even at the beginning, Solana was kind of built, and Anatoly said, hey, we're doing this so that we can put an order book on the blockchain. and we can have internet capital markets. And so we're like building this thing, we're making it faster, we're making it cheaper, we're making it more transactions. And we start to realize that actually we don't quite get every property that we want of efficient markets on chain just by making everything faster and cheaper. And so we do need to like look at a deeper level into the specific like mechanisms around ordering, because those are super important for which kinds of markets you can build on chain and which kinds of markets you can't build on chain. And it's partly because a lot of other people around the industry are looking at that topic, right? We're not the only ones. It's not just a Solana specific shift. I think everywhere in the industry, there's people looking at the internals of scheduling and how apps are sequencing their transactions.
So obviously this term internet capital markets gets thrown around a lot in Solana these days, which loves itself a tagline. But is there just like a succinct way that you would explain internet capital markets? What's your definition?
I would say we just want to build the most liquid markets on chain and let them be accessible to anybody. So like there are liquid markets that are off chain that you have to build tens of millions of dollars of trading infrastructure to even access. And we kind of want to build something that is as easy to access as a website, but gives you access to global liquidity as fast as possible, as deep as possible, with the tightest spreads possible.
Mm-hmm. So now that we have that overview, there's sort of a short, medium, and long-term time horizon for this roadmap. We happen to have the people kind of building the short and medium here. So Lucas, in the short term, what the blog post lays out is that once Jito's block assembly marketplace or BAM goes live and Onza's transaction landing improvements go live, that's kind of the short term, most quick way to make this ICM thing a reality. So walk me through what that's going to look like.
Yeah. So Onza's been doing a lot of great work on the networking stack inside of Agave, and just able to process way more transactions than it previously was capable of doing. So I think BAM will benefit from some of that technology, and then hope to accelerate it a little bit more. And the other thing that BAM will enable is this application controlled execution. We talked a lot about this on the podcast yesterday, but basically the goal is to figure out ways to, hey, BAM, there's a lot of benefits in BAM, more transparency and more like determinism on what's going on. But can we also provide applications more control over the way that their transactions are sequenced? So there's a blog post that went out last night on the July, was it 31st? That talks about kind of a first pass at ACE. So how can we actually enable ACE for applications in a permissionless manner? And this is just like a starting point. Like this isn't necessarily what the final form looks like. There's probably going to be some iteration here. But it's like, hey, if we wanted to do this inside of BAM, how would we do it? And the cool thing there is that we've been talking to a lot of apps that want to enable ACE. Those that are already on Solana, those that want to come on Solana. And it was a very highly requested feature. And basically BAM will give them the tools to enable ACE on hopefully a very large amount of stake very quickly. So instead of forking the validator client and everything like that, you can just deploy it in BAM and kind of get access to that. So yeah, those are like kind of the two short-term, like next 3 months or so, things that Onza and Jito have been doing.
Yeah, and I think just to jump in there, the interesting thing about this is that in previous iterations of these kind of MEV evolutions, you've seen new schedulers come online, and the way that they try to attract new stake is to basically provide higher rewards for the validator at the cost of which kinds of apps can be produced, and in turn, how good the user experience is on chain. And what we're seeing now is a paradigm where it's like, who can produce the best outcome for apps. And I think from my perspective, that's super positive. Obviously, it's still a permissionless network. Anybody can run whatever software that they want. But my hope is that validators would choose the software that helps apps work the best. So whether that's spam or something else, the goal is really just to make Solana as friendly a place for applications, because those are really what drives revenue, what drives activity on chain. And if applications don't want to build on chain because they want to do something that we can't let them do, then we're kind of cooked. So that's the whole goal of all of these changes together, is make as friendly an environment for applications as possible.
Yeah, I think another way to think about this is like, what's the fundamental problem or feature set that it needs to be solved for something like internet capital markets to go from a meme to a reality? And for years, basically since blockchain first came on the scene, the validator or the block builder, whatever version of that exists in this particular model, is the dictator, right? There are basically no rules about what a validator can and can't put in a block, except that it can't include a transaction whose signature fails, right? That's pretty much the only thing you could not do when you were building a block. If you put in an invalid state transition, the rest of the network votes against it. But you could put a sandwich attack in. You could decide to not put anything in the block and just submit a totally blank block, right? There were all of these sort of components. And that's really what made the first versions of MEV possible, is that a validator has complete control over what it puts into a block. This is not how traditional exchanges work, right? If you trade on the New York Stock Exchange, if you trade on the CME, there are rules about what you can and can't do. And there are, in those cases, permissioned systems using permissioned code that determine what can and can't be done on an exchange. A classic example of this is prioritizing cancel orders before taker orders, right? And so this is a dynamic that's designed to produce outcomes that increase liquidity and also decrease profit, right? It's fair to say. But the way that these systems are structured is meant to be friendly to the overall health of a market, as opposed to the beneficiary of the person producing a block. This is a really big departure for crypto. And I think like culturally, this has not been absorbed yet by the market. But when Hyperliquid came out and said, we're prioritizing cancels above other types of orders, and because we run a closed source network with a permissioned validator system, we can actually enforce compliance with the rules that we write for the system. That was a pretty big change. And, there's a whole big question about like, would crypto accept this sort of new, operating framework rules? And you saw a lot of attempts to get there in Ethereum beforehand, with producer builder separation and a bunch of these things that all like kind of failed, right? Like MEV Boost is not profitable on Ethereum. PBS like sort of works, sort of is subsidized. It's kind of Max can probably go into greater detail of that than I, but it's not a particularly successful framework. And so the question is kind of like, are you going to take the same approach as before about saying, look, a validator is a dictator, it can do whatever it wants, and you need to design applications knowing that's a possibility? Or is it worth trying to build a new framework that says, actually, like we're trying to quote really tight spreads. Maybe one of the problems with that are market makers getting sniped off. Maybe some of the problems with this is transactions being executed in an order different than an application wants, or simply if an application wants to have a series of transactions go in a particular order. Previously, the only way to do that was kind of to bundle them through Jito and send them in and kind of just hope that happened, right? And so the idea with application controlled execution is you go from things that are probabilistic to things that are much more deterministic in how a series of transactions is ordered. Now, there are downsides to this, right? I think anyone who's telling you this is only, sunshine and roses is like, there's a lot of work to be done by applications. There are undoubtedly externalities to the existing market structure that exists on chain, that the only way you find them out is you ship the code and you test in prod. And I think like to Max's original point, like Solana's historically shied away from this, because the idea that in such a complicated system like Solana or any other blockchain, you could ever model all of those externalities before you actually ship to prod is kind of something that Solana's culturally rejected for a while. And I think continues to reject, as sort of, as Lucas said, this is like a concept of a plan, to quote our president. And that's not a bad thing, right? But no one should look at this and say, like, this is the definitive roadmap. All these components will ship in the exact same format they are. It's more of a vision statement that combines multiple objectives that move us closer to a place where something like the Figma IPO can actually happen on chain and not leave $4 billion of potential value out of their initial listing price compared to what they were trading at when they actually hit the liquid markets.
Incubated by Polygon and GSR, Katana is something different, a purpose-built DeFi chain that's focused on giving the best experience possible. It does this by sustainably generating deep liquidity and sustainable real yield. Katana is built from the ground up, with DeFi mechanics to keep your bags from just sitting idle. All you need to do is use your favorite protocol, and Katana mechanisms do the rest of the work for you. Katana is launching with a notable ecosystem of primitives, assets, and partners including Morpho, Sushi, Lombard, Chainlink, and Yearn. Katana is a DeFi-first chain, built for deep liquidity and real yield, by redirecting chain revenue back to active DeFi users. The 1 billion CAT campaign is live. Bridge and deposit directly into vaults in one simple click, and start earning immediately on your ETH, BTC, USD, and more. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. IPOs on chain is something I want to get into later because, Figma is heavy on the brain right now. But one question I want to bring up is, you look at something like the ICM roadmap and how to make Solana even more competitive in the blockchain world. And I think this comes from an assumption that whoever has the most apps that generate the most revenue, the best user experience is going to win long term. Now, we live in this weird kind of digital asset treasury world right now where it's all very narrative and hypey, but I think that you do the ICM roadmap because you believe that long term Solana needs to be able to compete against other blockchains if it's going to win. So I'm curious to ask you guys, and anyone can chime in here. Do you view Hyperliquid as the biggest competition to Solana right now, or in the next few years, or is it still Ethereum and its network of layer twos? Because I will say, some Ethereum people are going to cringe to hear this. Like Hyperliquid is very young; it's an upstart, but I see a lot of stuff like prioritizing cancels, in what Jito plugins could offer, for instance. And to me, that sounds okay. It's Hyperliquid did this thing that the market really likes and has made spreads tighter, and so Solana needs to catch up. So what's the biggest competitor, Austin?
Yeah, it's kind of an interesting question because like spreads are actually extremely tight on chain for liquid markets. Like there's a new AMM that's popped up in the last few weeks that's like quoting like 1 or 2 bips on some spreads. It's really, really interesting to see. And that's without any of the stuff that we're talking about here, right? And so is it strictly required? I think that's not really the right question. I think it is, does it allow new economic systems to get built on chain that currently aren't possible? And what Hyperliquid has shown is that there is a room somewhere in between your traditional DEX and your traditional AMM and the Binance order book. And there's actually a really big market in that in-between space. And so you can sort of look at Hyperliquid as the world's worst blockchain or the world's best sex, right? And like, I don't think either of those is particularly fair framing. They've done like, obviously they have incredible product market fit in a very short period of time. But what they've basically showed is like, all you need is a good bridge and a good execution environment. And suddenly you can start competing with Binance, which candidly is something that no other non-centralized project has been able to do, right? Price discovery as far back as basically 2015, 16 has been off chain, right? And this is the thing that's like really important is like everyone who's been talking about we're building the future of finance, that is true. But the reason oracles are important is because price discovery happens off chain. If price discovery was happening on chain, the role of an oracle in these systems would be much less because they'd be communicating data out from the blockchain to off-chain systems as opposed to running the opposite direction. So to get to your question about is Hyperliquid like a competitor to Solana, I mean, the answer is yes, but it's also a competitor to Ethereum. It's a competitor to Sui. It's a competitor to Aptos. At the end of the day, any execution layer blockchain is competing with any other execution environment. And that's kind of the core thing to keep in mind. It doesn't mean it can't be additive sum to the whole space. But seeing promising smart ideas from other ecosystems and bringing them into whatever particular ecosystem you define as yours is like one of the features of crypto, not a bug.
And Austin, let's just ride the hot hand here, because we got a little off path here, but Lucas kind of took us through the short term ICM vision. The medium term in this blog post involves DoubleZero, Alpenglow, and something I hadn't heard of previously, which is asynchronous program execution, or APE. But
yeah,
let's talk through that, Austin. Obviously with a focus on DoubleZero, which I think you're very qualified to update us on.
Yeah, certainly. So yeah, I for those who don't know, I spent the last 4 years working for Solana Labs, then the Solana Foundation, before leaving at the end of last year to build DoubleZero, which we've jokingly called crypto's first infrastructure project. Because what it is at the end of the day is it's an OSI layer 1, 2, and 3 network of physical cables in the ground, physical fiber lines around the world, basically building an alternative pathway for high performance distributed systems. And so what we're able to do there are take all of the tools and technologies that were developed for TradFi, for CDNs, for Google's private networks and Amazon's private networks, and bring them to blockchain. And the reason we're able to do this is they're not run by any one entity, right? No one would trust the Solana Foundation or a for-profit company or anything like that to run a private network carrying all of the state and transaction information for Solana. But suddenly, if you have 10, 15, 20 different networks in the mix, and they're all following the same programmatic rules, and they're all enforced through tokens, suddenly you have a system that can deal with massive acceleration in capacity and speed. And so one of the main things that DoubleZero Network offers is direct routing on dedicated fiber cables. And so we go from a very latency prone, very jitter prone networking environment today to one where, if my validator is in Singapore and is trying to talk to a validator in Tokyo, it will always take X amount of milliseconds. So one of the real powers of TradFi is getting rid of variability. There's all these types of trading systems where you can say, I have modeling that shows in 35 milliseconds, the market will be in this point. So if it takes you 32 and a half milliseconds to get to the NYSE exchange server, you're going to make that trade. If you think it might take 32, but it could take 41, you're not going to make that trade because the variance is too high for you to feel confident being able to make that transaction. And so the same dynamics do apply on a blockchain. And everything that, Max and Lucas have been talking about is all on the execution side, right? Can you control the sequencing, right? That's a major component to, will someone make a specific trade or type of transaction or build a certain type of application? But there's a whole other component of how do we get the data to the place a block is being built? These aren't centralized systems where there's one ingest point and we're all racing to that one ingest point. There's 1,500 ingest points all around the world running in over 300 different data centers. And depending on who's building a block at any given moment, the place you need to get your data to is kind of anywhere in the world. And so you can sort of think about this as like we're bringing like the positive side of Flash Boys to crypto for the first time. And one of the other advantages of this is it just, quite frankly, allows Onza and Firedancer engineers to start jacking up the parameters of the cluster. We've seen some really awesome work this year moving from 48 million CUs to 60 million CUs to maybe 100 million CUs. But block times aren't really getting shorter, right? And if we start to see like deterministic networking in places like DoubleZero, we can start actually shrinking block times down even further, which starts to get even more competitive with the traditional systems.
Can I jump in on one point, which is a big callback to something you said like 5 minutes ago, Austin, but I think is important to actually clarify. So you said people are quoting 1 to 2 basis points wide on chain right now, which is correct. But I just want to add some color to that because I don't think that is like a sustainable thing long term. Like if people were already quoting 1 to 2 basis points wide and we thought it was sustainable long term, it's kind of like, hey, we're done here. Like the system is working as we wanted it to work. Maybe we don't need to do all this work and we can go home and pat ourselves on the back. But unfortunately, like if you kind of play out how this system will work in the long term, it doesn't quite work. So what's going on there? There's this new primitive that we call prop AMMs now. And these proprietary AMMs are basically taking their trading logic that typically in a traditional market would be on the trading firm servers, and they're putting some of that logic inside a Solana program. So what that allows is, like, as soon as things happen on Solana in the runtime, the program immediately knows. And so there's no like round trip time between, say, the Jane Street server and the NYSE server. So these are proprietary AMMs, and they are right now able to quote quite tight on chain. And one of the reasons is there's an interesting feature of the current Jito auction system, which is that it prioritizes based on priority fee per CU. So the average Jupe transaction, which is like a user transaction that's trading on one of these prop AMMs, is about 150,000 compute units. And what they've done is, using Pinocchio and a bunch of elbow grease, they've been able to get the Oracle updates and the information updates to be much cheaper than that. And so it's effectively a cancel prioritization mechanism in the way that the Jito engine works right now, in that it's doing a tip per CU prioritization and putting these very small CU Oracle updates. One of them is below 1,000 CU now. So that's 150x priority difference between the cancel or the Oracle update and the take order. And so that's what's going on right now. And the worry is that that's not necessarily a sustainable revenue maximizing thing for the validator to do long term, to sequence things this way. And so if we like let it run loose and we did PBS, so PBS different than Jito in that in PBS they sequence things in multiple orders and they choose the best block. Whereas Jito is kind of running a one-shot auction and putting the first thing with the highest tip per CU first. That's kind of my understanding. Lucas knows much more in the weeds of that than I do, but that is like a fundamental difference between ETH PBS, which takes kind of the highest price to get there first, versus Jito, which is taking the highest tip per CU. And the tip per CU, it does result in much better market structures. And unfortunately, it's like not quite incentive compatible. And so all of this is like, how do we get that market structure to actually be what the validators have to do, instead of the validators kind of forking this out and producing a much worse market structure, which they could do.
Do you have thoughts on how that plays out, Max, long term? Like, where this prop AMM trend has been an interesting one to watch, but how do you foresee it playing out on a longer time horizon?
I think the idea of having the core trading logic in a Solana program is the future of finance. And I think everybody who's not looking at this right now is making a huge mistake, because this is a clear paradigm shift in the way that we think about everything in crypto. And it's probably terminally correct to do something of this type, where you put a lot of the trading logic on chain and it operates in the runtime. So I would say everybody should be looking at this for sure, but it's like very complicated, and it's also very hard to, there's nothing you can go like type in Google and read about proprietary AMMs, right? Because nobody's written about it yet. And there's a bunch of these little details about what's actually going on that are hard. And there's, I've been looking at it for a while, but there's a bunch of things I still don't know about how everything works there too. So I would say it is one of these things that comes up every year that just like completely changes the way you think about markets on chain. And I would say the last one was kind of these Telegram bot style of things, and Axiom just changing that interaction and not having the wallet, having to sign everything was a big shift a couple of years ago. And this is kind of that next shifter of like, this is really changing the way that markets are being made on chain.
Yeah, you can kind of think about this as like the way it almost should have been done all along, but blockchains weren't either fast enough. Like we went through a whole trend in like 22 and 23 where all of the trade logic for Ethereum applications was moving off chain, right? You get matched through an off chain system and then you just sort of settle it on chain. And that was because there wasn't enough compute or enough speed to actually do it in that way. But when you have the resources of a network like Solana, and you can also forward project and say, okay, well, like between DoubleZero and what Agave has been doing and what Firedancer has been doing, we can expect the capacity is going to quadruple over the next 12 months, probably, maybe less than that. We're going to get to a place where these things are no longer limiting factors. And so pushing all the logic on chain, I mean, this is kind of like Uniswap v3 was very directionally correct with the idea of like post-trade hooks and things like that could be called. This, to me, with the prop NMs feels like kind of like the version of that just went hardcore for a few years and like never looked up from the keyboard, and it has come on the scene as something that's quite powerful. I think the challenge as we look through sort of like the arrival of BAM and application controlled execution is, how do you keep the incentives for people to like have that level of performance increase and not create something like the speed that BAM is able to build blocks at as be a blocker for future scalability? Not that anyone's talking about that now, but anytime we look at adding complexity to these systems as out of runtime, we do introduce potential portions of delay into that. And that's kind of where I think the future of this stuff is going to be very interesting, because what we want at the end of the day is we want competitive markets that reward people for innovation, right? And this is where like my opposition to enshrinement is always that enshrinement creates instances where people are not incentivized to perform above the median, right? And so this is kind of where like Solana's been doing a really good job so far of walking this very careful line between adopting new technologies and not like, enshrining is another term for nationalizing, right? We just don't like to call it that, right? But like not nationalizing existing products and saying, okay, this is the only option, but by saying this is an exceedingly good option, everyone should use this option. And then, at some point there will be a competitor to BAM that comes up. I hope there's a competitor to BAM that pops up, because that's the whole point of open source projects and competition, is that we really want to make sure that there's a flywheel of competition that rewards higher performance. Like that is the only reason DoubleZero is possible, is because there's this whole open ecosystem on Solana where speed is able to be rewarded. And I think application controlled execution and BAM are very much part of the next generation of that.
Incubated by Polygon and GSR, Katana is something different, a purpose-built DeFi chain that's focused on giving the best experience possible. It does this by sustainably generating deep liquidity and sustainable real yield. Katana is built from the ground up, with DeFi mechanics to keep your bags from just sitting idle. All you need to do is use your favorite protocol, and Katana mechanisms do the rest of the work for you. Katana is launching with a notable ecosystem of primitives, assets, and partners including Morpho, Sushi, Lombard, Chainlink, and Yearn. Katana is a DeFi-first chain, built for deep liquidity and real yield, by redirecting chain revenue back to active DeFi users. The 1 billion CAT campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your ETH, BTC, USD, and more. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. So, Austin, one thing I wanted to get into as well is we talked kind of generally about this medium-term part of the ICM roadmap, but I think DoubleZero is a project that people in Solana are just really interested in. All of our episodes we do get a lot of views, honestly. And so I'm just curious, what's the update? August 1st, you had I think you're on testnet with the DoubleZero network. What kinds of improvements are you seeing to, validator speeds? Like try to quantify the progress you're seeing with DoubleZero.
Yeah, certainly. So, testnet for us is actually a fully functional network, and we have 70 Solana mainnet validators running on the network as of August 1st. But the testnet is a much more limited set. It's only 7 different cities that we're connected in. It's only 10 gigabit per second links. And there's some of our slowest links, because why would you put the best stuff in testnet? Because we have to save that for mainnet. But even there, we are beating the public internet by 35 milliseconds across some routes today. And the public network that's going to be rolling out this fall includes a lot of 100 gigabit lines and redundant pathways all around the world. And one of the things we're really focusing on is geographic distribution. So there's currently these kind of like gravity wells of stake, right? There's one kind of around Amsterdam, there's one kind of around Tokyo. And what we're trying to do is basically make it possible and profitable for people to run validators outside of that core. And so, we're having fiber connectivity down into Buenos Aires and down into Sao Paulo as well. as well as getting lines into the UAE and sort of trying to expand the geographic footprint of where things can run. We did launch a stake pool just yesterday, which is with DZ Sol, and that stakes to validators on the DoubleZero network. Our core metric really of success, apart from there's kind of two components of this. We will undoubtedly increase the aggregate performance of the validator network, which will allow Solana to move more quickly and raise cluster parameters more quickly. But that's not enough, right? Each individual validator, we also have to be saying to them and proving to them, we can actually make you more profitable. And this is why a bunch of the work we've been doing with Jito is really important, because if we have less latency between block engines or block assembly marketplaces and those individual nodes, different types of transactions will be doable and valuable that aren't valuable today. And so we both have to increase the aggregate performance of the Solana network and increase the specific performance and specific revenue of an individual validator. So we can't basically trust everyone to make good decisions on behalf of the long term of the network. These are fundamentally self-interested actors who are running validators, as they should be in a good capitalist society.
So when this thing came out, it was a really interesting experiment, and I think we were all excited to watch just sort of how you progress through this vision of DoubleZero. What has been like the expectation versus reality? Have there been unexpected roadblocks that you've hit, that you've had to, that took more time than you expected, or how has everything kind of played out?
I think we have the same problems that anyone building low-level infrastructure for Solana has, which is that Solana is a moving target, right? So like the work we're doing with FPGAs to do transaction deduplication and a bunch of spam protection, as well as signature verification, is Quick going to stick around? Is Quick going away, right? There's a bunch of those type of things that have a lot of implications for us. The proposal to raise transaction sizes. Well, suddenly, if you're going past jumbo frames of MTU sizes, that changes how we have to think about FPGAs working. And so this is not something specific to us, but at the same time, it's a characteristic of Solana we love, that it continually reinvents itself and pushes the bounds forward. But that's not like a specific thing for us. I will say we're probably a year further ahead than where I expected us to be at this point. I really thought this is the most boring project in crypto. It's physical cables under the water. Like, all the exciting stuff is on smart contracts. We've got all these applications launching on Solana. That's the meta, right? It's all about applications and revenue. But it turns out people really like fiber, and they're very interested in these low-level, system-level improvements. So we've been pretty blown away with the support and adoption. And so I'm really excited to get this thing out and see how people enjoy operating on it.
So I want to bring Lucas in here. Let's assume for the moment that DoubleZero and Jito and people that are in dominant positions in Solana are working in Solana's interests, which is to create internet capital markets, to create markets that are as liquid and functional as possible and can compete with sexes. But there are also people in Solana who will work against that vision, doing things like sandwich attacking or proposing blocks too slowly because, crypto is kind of a capitalist market and people are going to do whatever they can do to get an edge. And I think Jito is an interesting case study here, because you guys dealt with sandwiching for, all of 2024 and had to, you got rid of the mempool. And then you the Jito Foundation, I think, established a blacklist of addresses that won't get stake from the Jito stake pool. So to the extent that there are bad actors on Solana, I guess, how has what you've done at Jito with sandwiching and maybe slow validators, to the extent you were involved with that, showed like the way that you can most sustainably and effectively deal with bad actors, Lucas?
I mean, we're kind of taking this from a few different sides. There's some like reworking going on in the Jito Sol delegation algorithm. Right now, it uses StakeNet, so it's like randomly it delegates to a bunch of validators based on their scores. Some of those things are like weighted heavier than others. So hopefully we can figure out a path forward for actually like the Jito Sol side of things that will like, as a stake pool, we want to be supporting good validators. Every stake pool is going to have different definition of what that is. So like the DoubleZero stake pool, that's all about supporting DoubleZero. We might have I think there's a lot of shared things that we share with DoubleZero, and like supporting faster internet and lower jitter and everything. But then there's a few other things as well that we might care about too. So yeah, it is a cat and mouse game. But ideally we can figure it out and make sure that we're helping support the network.
Lucas, what is your plans around who will be able to use these plugins and application-specific sequencing?
Yeah, we want to make it permissionless to build or to like run these plugins. So we need some help figuring this out. There's an ecosystem advisory committee that we want to put together so we can help make these decisions. And like, it's not just Jito, it's a bunch of different stakeholders trying to figure this out. So yeah, we want to try to do that. And then I think we're hoping that if we can like talk to a bunch of applications, figure out common patterns between them and just build very generic types of plugins that are permissionless, that is a very optimistic path forward. And hopefully we can keep doing that. Because yeah, we want to make sure we're supporting everyone and giving everyone an equal playing field.
Continuity issues here. Lucas is gone. He was having some construction. Sorry about that. Hopefully we were able to get some Lucas in this episode, but the show goes on. We're professionals here. Max, talk to me about the long-term vision. Tell me about multiple concurrent leaders and Ace.
Yeah, so this is something Austin was mentioning earlier, but right now it does feel like Solana is kind of a moving target. And part of the reason for that are these cat and mouse games where you're constantly having to evolve the way things work. So you have things like Triton has a whitelist product that tries to stop the sandwichers from sandwiching your transactions. You have all these things that I'm sure the people who are building the block engine at Jito could talk about in terms of stopping spam and stopping bad behavior that they've had to do. And they've changed the market structures so frequently. And unfortunately, for like long-term stability and spreads and for desirability of trading on chain for like big players like a Citadel or these guys like don't want to adjust their trading strategy every 10 weeks because some new thing gets found. And so multi-leader is kind of how do we get to a place where we don't have to make a bunch more changes? Because the Nash equilibrium is just C transaction, include transaction with highest fee, and then everything else downstream of that is up to the apps. And that will kind of remove a bunch of complexity from user space and from validator space at the expense of, it's going to be slightly more complex to implement. But as Tully always says, we have the kind of pain pyramid. So we have the users are most important to keep them from having pain. And then the app devs are second most important. And core devs, we can make them eat as much shit as we want because that's kind of how you build a successful product that users want to use is you prioritize them. So that's kind of what multiple leaders is about. And then there's one more thing, which is that it does allow the system to kind of eat information about the world from multiple sources at the same time. This is something that like traditional exchanges don't do. If you're in New Jersey, like you're in ISE, you're in New Jersey, you get information from Tokyo 100 milliseconds after it's generated because that's the speed of light. Whereas if you have one node in Tokyo and one node in New York, you can eat information from the perspective of the on-chain execution. It looks like you're eating information from both sources at the same time. And this does result in tighter spreads that you cannot get with a centralized exchange. So I think Brennan, who works at Onza, had a tweet that was like, right now we look at geographic decentralization as a bug that affects performance because we have to like send messages across long distances. And this reduces our ability to produce blocks quickly. But I think in 2 years, we'll be looking at geographic decentralization as one of the key features that makes Solana special and gives us the ability to do on-chain price discovery, internet capital markets, and have really liquid markets around the world settling in the same place at the same time.
Yeah, let me like pill you for a second fully on MCL, right? And the reason this is so exciting is I'm going to start with something that I'm not sure everyone will agree with, but I hope you do at the end, which is that all traditional financial markets are local. They're hyper local. Now, it just happens that price discovery happens on the New York Stock Exchange, but that market is so local, it's limited to one data center in Secaucus, right? And the London Stock Exchange is also a hyper-local market. The Nikkei Stock Exchange is another hyper-local market. There's not actually that many of these markets around the world. And so where is all the money made, right? The money is made by Jump and Citadel, and it's made by these high-frequency trading firms that what they're doing is basically information arbitrage between extremely hyper-local markets. That's fundamentally the same thing that's happening between like Binance and Coinbase, or an L2 with a centralized sequencer in one location and Coinbase and Binance. You're comparing extremely local markets that only exist within a very small light cone to other markets that exist within a small light cone. And this is where if you read, Flash Boys or one of those like high frequency trading books from the advent of it, what you're really talking about is how quickly can we create arbitrage opportunities between hyperlocal markets. If the vision of MCL is realized with even 2 concurrent block leaders, what we've done is we've created 2 local markets that roll up into one global market. If we have 4 concurrent leaders, we have 4 local markets that roll up into one global market. And so what we're basically doing is each additional leader that you add, assuming, rough geographic distribution, shortens the time that it takes information to get into a market and that market to be able to respond to it. So instead of saying, like the TradFi game of saying an event happened on the Nikkei Stock Exchange, I need to race to the New York Stock Exchange to make a trade, you're able to say information has occurred anywhere. I'm racing to my local concurrent leader, which can then settle me onto the global system. In some ways, this is like, I'm going to get so much crap for this. This is the true roll-up centric roadmap, right? Except what's rolling up instead is information as opposed to state. And this is the really cool thing about multiple concurrent leaders. Now, there's a huge amount of technology to be perfected and in some cases invented to actually make that work in a robust way. And that's why it is the long term. It's not the short term. But Alpenglow and the way it treats votes is like one really big step in this direction as well. And so, from my perspective, like this is part of why Solana remains like a very interesting network to build on for someone now who's, working on a physical fiber infrastructure network. Is Alpenglow needs fast vote confirmations, right? Multiple concurrent leaders is eventually going to be limited by the speed at which the network can synchronize all the data from those local leaders. And that's where the speed of fiber really starts to matter and the public internet becomes a bottleneck the exact same way that it is in TradFi.
Yeah, and I would say, one more piece is let's combine that with the fact that we're going to have a lot of program logic that's implementing the trading strategies on chain. So now you're not worried about, 300 millisecond time to confirmation, which would be great if we could get there. We're about 1.2 seconds right now. And I think we have like kind of the technology to go down to 300 millisecond confirmation times, finality, like hard finality in the blockchain sense of finality in the next few years, just with the technology we have today. But then you add to that, like, hey, you're putting your program on chain and it's immediately responding with the strategy that you pre-programmed. So you don't have to wait for the finality to get another trade in there. So I would say like all of these things kind of fit together where we're talking about the prop AMMs, we're talking about on-chain programs, we're talking about multiple leaders, we're talking about application controlled execution. And if you put them all together, you have something which is TradFi cannot produce this in the current sense because the SEC will block it. Even if they had the technology, the SEC would say, absolutely not, you're not doing this. And they've done it in the past, right? Like even simple things like CBOE applied for a 4 millisecond asymmetric speed bump and they denied it and they said it wasn't fair. It's like, okay, you guys don't want to compete. You guys are the Europe of financial applications. And so we're going to be able to innovate in a way that TradFi cannot innovate, even if they did want to innovate, which they don't.
Yeah, and sort of to double down on that, it is unfair in TradFi because TradFi is fundamentally a permissioned architecture and a permission system. right? Where this is like a really big differentiator. All of these things only work if running a validator is permissionless. Now, permissionless obviously does not mean free, right? Permissionless still means you have to run a server and pay vote credits and all these types of things. But permissionless is the unlock here, that if I have, if I'm starting a prop trading firm, I still need relationships and I need approval and I need all these things to actually get a box at an exchange. I don't need any of that if I'm trading on Solana or any other permissionless blockchain. And so, like, this is the major unlock against TradFi systems, is like there's so much they can't do because TradFi systems are fundamentally unfair systems for which regulation is trying to force fairness on top of. And with blockchains, like the thing that has made blockchains so powerful over the years is everyone trying to screw each other over makes a system that is beneficial for everyone. Like that sort of idea of like we're weaponizing greed to produce positive sum outcomes is like the core philosophy of blockchain. And I look at MCL and I'm like, this is like the truest expression of this since the advent of Bitcoin.
One piece I want to get your take on is, the internet capital markets vision says that like basically all parts of the trading experience should happen on chain. But there's this competing vision in Ethereum where, to my understanding, the most recent kind of, pitch for Ethereum that's being, Tom Lee is going on MSNBC to talk about and whatever is that Ethereum will be the global settlement layer. So maybe not all of the trading needs to happen on chain, or it could happen on a layer 2 that has a centralized sequencer, but you have this credibly neutral blockchain that is going to settle all of the stable coins and all of the financial services that move on chain. Why, like contrast what you're talking about with ICM with this kind of Ethereum meme of the global settlement layer for finance?
I don't think that's what they were trying to achieve initially. They just couldn't achieve what they actually wanted to achieve. Like, if you look at early writing from 2016, it's not like, oh, like we're going to be a settlement layer that JP Morgan is going to use. Nobody was saying that in 2016. I would say it's not a vision. It's a lack of vision. It's a resigning yourself to letting somebody else solve the problem, and inevitably in a way that would not be at all attractive to the Ethereum people of 2016. The same people who are right now going, shilling, glazing everybody up on CNN, trying to get TradFi to buy their bags because nobody else wants it. Those people are visionaries from 2016 who wanted to bank the unbanked and replace all of finance. And now they're going and like saying, oh, put like your finance on chain and we'll settle it for you. It's like, no, we're not doing that. Like, we're going to replace you because you suck. That's the Solana vision. And the Ethereum vision is like, oh, we tried, but we couldn't really hack it. So let's just like do the same TradFi stuff. And maybe like they put some transactions on our ledger that does 20 TPS.
You did not disappoint, Max.
Look, I will say I think there is some interesting stuff still happening on Ethereum. And like it is worth, like on a certain level of abstraction, Hyperliquid is happening on Ethereum. Now, in the sense of it's an Arbitrum L3 that uses that as it used it as its USDC bridge, another asset bridge when it launched. But like, I think at the end of the day, if you're trying to compete with a settlement layer, there's two things you're competing with: Bitcoin and the Federal Reserve. If I have to choose who I'm going to compete with, I'm going to choose TradFi as opposed to the US Federal Reserve and Bitcoin. And I think it's a much more interesting problem to solve on the execution side than on the settlement side. In some ways, like at the end of the day, the ultimate settlement layer is physical safety, and everything is an abstraction above that, right? Like we sort of like forget that like the point of the US dollar is it secures the US government, which secures property rights. And like that is a much more thorny, weedy, like it's the classic situation of like, I have self-custody on my ledger until there's a guy with a gun pointed at me. And then like self-custody is not worth very much, right? And so like, I know this is like pretty far away from the settlement layer, but at the end of the day, settlement layer is an abstraction for physical safety. Whereas execution is not. Execution is the purest extension of a market, which can exist in the absence of physicality. And that is sort of the way I think about like, what is the most interesting space for blockchain to play in? Like, there may be a world someday where physical security is implemented through blockchain. I can't even begin to tell you what that would look like. And so, when we look at sort of where the areas are that blockchain can add the most value, I think the Federal Reserve and the US government does a pretty good job compared to every other government system in the world. Bitcoin does a pretty good job compared to every other asset class in the world. And so it's the execution layer where the innovation can happen. And I think where a lot of freedom can be injected into systems that currently lack freedom.
Let me pose a hypothetical to you guys to kind of conceptualize how far along we are in this ICM roadmap. So say Elon Musk decides that he wants to IPO SpaceX, and Nikita Beer is like, hey, I'm an advisor to Solana. You should do it on Solana. And so he wants to take SpaceX stock, and assume the SEC is like chill with this. There's no regulatory barrier here. How close are we to being in a world where you could, IPO SpaceX on Solana and then have the stock trade and do all these things?
Okay, so I'm going to give you like the non-technical answer, and then Max can give you the technical answer, which is SpaceX is probably more valuable than Ethereum today in market cap. So this is really a Rorschach test of if you think economic security is a meme or if it's real. And, I would view success for any execution layer as being able to facilitate more value transaction and more asset issuance than the underlying asset itself is worth. There are a lot of people who fundamentally disagree with me on this, but I think it's a failure case for this technology if the market cap of the L1 must be more than the market cap of the things issued on top of it.
Yeah, I would say, just to answer the question directly, some context, we're like the day after TradFi just incinerated $3.2 billion on the Figma IPO because they set the price way, way, way too low, like a third of what it actually should have been.
Like a month after they did the same thing to Circle.
Right. And they're going to do it again for 30 more startups this cycle because it's kind of frothy and they don't know what they're doing. It's some guy in his cubicle with his spreadsheet, and he like types a few numbers in and multiplies 3 random numbers together and gets a valuation. That's how this thing works for some unknown reason. And then they like go on CNBC and they say, oh, we're 30x oversubscribed. It's like, you ask anybody in like the first year of their econ course whether being 30x more demand than supply is a good outcome for the market. They will tell you absolutely not. So one thing is like, we could just hold an auction, and you can do that today. I guess like Gavel, which is a product that Ellipsis Labs has built, which was originally for fair launching meme coins, but is built for this exact application, which is we have an asset which we are listing and it's going to enter price discovery. How do we do that in such a way that it's not the first to get there, but it's the person who wants to pay the most that gets the asset? And we have price discovery with minimal $3.2 billion incineration events where you pay your friends and family who got into the round. And if you don't have, another shout out for permissionlessness, if you don't have a connect at Goldman Sachs or whoever did like the IPO for Figma, you're not getting into that private round at a third of the valuation of what the thing should have been priced at. So I think in some ways for the IPO like period, we have the technology already. It could be made even better and faster price discovery on new assets with multi-leader because you can hold the auction faster. But then the question is like, after it starts trading, can we handle the price discovery throughout the whole day where it's super volatile? Can we handle it throughout the year? I would say for something like SpaceX, it might be really a lot of scale to handle. But with the pump ICO, we did 600 mil of capital raise for that in 12 minutes and didn't go down even though the exchanges went down. So I think we're kind of ready right now for the initial IPOs. But the thing that would be pretty annoying is, what happened with Hype is now like they took a lot of the pump volume, even though pump launched on Solana, we handled it really well. They took a lot of the volume for themselves because they were able to offer in some ways a better product for perpetual futures on top of pump. And so then we don't want that to happen. So I think that's kind of where this roadmap is going, is how do we let apps on Solana take the hype perp volume and put it on Solana. And then when somebody launches an asset like SpaceX on Solana, it doesn't end up being a huge windfall for Hyperliquid.
Mm-hmm. And it's kind of a silly, insane hypothetical to ask about, but I do, because a lot of Solana markets are still centered around trading meme coins. Like that's kind of the dominant use case still today. And so I think it's interesting to ask, like, when you talk about internet capital markets, how does like real finance that pertains to products in the real world that are not meme coins, like actually coming on chain, what does that look like? I think is a really interesting question, and will be an interesting one to watch play out over the next couple of years. Max, you mentioned the Figma IPO. We're also a day after the SEC announced Project Crypto, where Atkins, stood up and said, we want to bring financial markets on chain, which was remarkable to hear, and a very big deal. And so, it's a little silly to talk about SpaceX IPOing on chain, but it might not look silly in a couple of years based on just what the mood is in Washington right now, especially.
Yeah, I think as soon as one does it, it's going to be like, you're going to see one does it and it goes successful and nothing problematic happens. Then it's just going to be a cascade of them, because what is kind of holding it back is this, nobody got fired because they incinerated $3.2 billion of Figma assets that should have gone to the Figma team and Figma investors during this IPO process, but they should have, right? And so you can get fired if you do a direct listing and it doesn't go well. And as soon as somebody realizes that, first of all, you need to fire the person at Figma who made the decision to do this IPO, you probably should fire the analysts who priced it so wrong. Like, those people should be fired. But also, like, we should reward people who don't do that and make the right decision. And the first person who does it, they're going to kind of open the floodgates, and it's going to be acceptable to do for every other company after that.
The ICM roadmap is getting people at Figma fired. Well put. Max, Austin, I think I'm going to end it there. It's been a fun conversation. It's been wide ranging. We overcame some technical difficulties, and we made it out on this Friday afternoon. So thank you guys so much for joining me, and look forward to having you on the pod again soon.
Yeah, thanks for having us.
Thank you. Appreciate it.
Thank you, listeners. If you made it this far, we'd love if you gave the show a like, a 5-star review, wherever you get your podcasts. If you enjoyed this episode, please share it with a friend, and we'll see you all again very soon.